Ladies and gentlemen of the crypto space, we're live on Tuesday at 11:29 a.m., January 19th. Y'all know what day it is today. Ethereum waited a couple years for today. Oh man, I slipped before. Got a stiff neck. All right. So Bitcoin's ripping too. We're going to pull up the charts. We're going to look at Bitcoin first. We're going to take a look at Ethereum. Just the macro charts are extraordinarily bullish this morning. And I want to get into the title that I put up. Most of these titles I think about like 5 seconds before the stream, but they're overwhelmingly pertinent to decisions and thoughts that we either do have on a daily basis or should have on a daily basis because they're the only way to make the choices we make better. And that's the game. That's all this is. It's you're not even investing in assets. What you're doing is playing the game against your emotions, your analytical capabilities, and rational deductive capabilities, and that's the game. It's literally a game against yourself. This isn't. It's not you're buying an asset. You're buying the properties of that asset. You're buying the analysis of it, and you have to fight your emotions because there's such incredible assets that have pretty names and incredible world-changing opportunities, and none of that shit matters. Yeah. Crypto in the paper bag, a game of emotional control. I guess that surmises whatever hippie bullshit I just said. Today's episode is sponsored by Change Angel, the non-custodial swap exchange for social goods. Stop depositing on exchanges, not your keys, not your crypto, non-custodial, DeFi, or nothing at all. Bam, let's pop it over to the main screen and see who's in the stream. Got Rick G in the house. Staff, always a pleasure. Lidge, good morning. Yes. Hi, Bitter. Hi, Bitter. Welcome. Craig's in the house. My man. Igor. John Yoen live. Yeah, I've been watching a little bit of that. Yeah, well, the Fed and the Treasury merged a while back, but that is a very apt observation that occurred. George Gammon had a great video the other day with, I forgot his name, but George has some of the most incredible content. He frames things in a very digestible and well, digestible is a great way to describe it. He frames things in a way that's easy to absorb and understand, and overwhelmingly appreciative for that kind of content. Yeah. So what do we got up? We got Bitcoin. So this is the 4 hour. The 4 hour is tapped out on the Stoke. Bear in mind, you could stay tapped out on the Stoke. The Stoke is obviously a derivative of RSI, Stoke RSI. So RSI's got plenty of room to run. MFI is peaking above 80. This is very bullish conditions in my opinion. Um, there's no reason it can't give a significant rip to the upside, especially consider the longer time frame chart what we see on the daily. MFI is volume adjusted RSI. So these three indicators I like to look to. They give you a really good sense of bullishness or bearishness. It's quite interesting when some of them are contrarian or exhibit divergence. But when they're all literally pointing in the same direction, that's meaningful. That's significant confluence. And just because the Stokes topped out doesn't mean you can't have a significant rip to the upside. When you have a ridiculous bull trend, the oscillators top out. You got to remember the oscillators are an analysis of market data, give insight into the sentiment of the market participants, but they aren't the market. The market is literally human beings, buyers and sellers. So all we're doing looking at data is trying to get a sense of the individual emotional state of a mass of buyers and sellers. Just insight, trying to get into the heads of the people that are participating in the markets. And markets are a manifestation of the herd, of the group's emotional state. Interesting shit, huh? Pop it on the daily, and you can see a whole different story as compared to the 4 hour. So you still got the symmetrical compression, lower highs, higher lows. Notice the circle. This was on the 4 hour where the 200 SMA looks to pushing towards the 200 EMA. 200 EMA weights more recent price action more heavily, which means this is flattening. It means the price action has been going horizontal. The more typically when you have like a rip to the upside, obviously the shorter term time frames are going to pull the 200 EMA higher away from the SMA. So that is interesting, especially given that we're coming towards the the convergence of the symmetrical compression. In some regards, you could view it as a mean regression, where the shorter term price action, mostly indicative of the EMA versus the SMA. The EMA is converging onto the SMA. It's a pullback, and that just interesting. Interesting, this, particularly the significance of how the EMA and the SMA are calculated. So on the daily, chart looks the same, coming towards the tip of the symmetrical compression, but the Stochastic is completely oversold. So completely reset, and look where the RSI is, and look where the MFI is. MFI is midfield, RSI is above 60. Wow. So all this bearishness where we ripped down to 30, it was a $12,000 rip down, give or take. $12,000 dip down, and the RSI barely exited overbought territory. Wow. So, yeah, what else can you say? This is an absolutely incredible chart, both on the 4 hour and on the daily. We don't need to really go out in the weekly and the monthly too much. This is a bull market. As I said, oscillators could easily be maxed out, and it just keeps going. We saw this historically. We see this in every market. But frankly, RSI dipped down. So there's room to run back to 100. MFI just below 80, so plenty of room to rip up. And the Stochastic also hit a bearish signal cross on the weekly, so there's no reason this can't rip up and push back towards the 100 mark. That's the name of the game. I'm sticking to really the 4 hour and the daily, given the state and the history that we know of Bitcoin. And when it rips to the upside, it really rips to the upside, and it just keeps ripping to the upside. So the long-term indicators over probably the next 1 year, 2 years, however long this bull run lasts, or this period of significant outperformance, those oscillators are going to be topped out, which aren't going to be incredibly significant for not intraday, intra-week price action. This is a intra-week. What is this? January 8th to the 19th. So it's 11 days. It's about a week and change, week and a half of price action. And then you're not going to see this kind of, you need to really drop down to the 4 hour of the daily to get meaningful data out of the charts. Interesting stuff. Let's go over to the Ethereum USD chart, because we definitely broke out of all-time high. Let's go over to the Gemini one. USD. Because that's where I have some drawings. All right, so it breached all-time high, but that top green line is really where you want to see like a breakout. So it wasn't ready to break out. So the top line, this line was the local top. This was the previous local top. So we're above local top, and we're wicking above all-time high. Let's zoom in. So obviously we're wicking above all-time high, and it's currently below all-time high. So it's not a breakout. This is not an all-time high breakout, because when you see an all-time high breakout, what happens is you have mass psychology. That's the way humans work. It's going to be a ferocious swing to the upside. You can start seeing, just like when Bitcoin was ripping a couple of days, week or two ago. You see, for Ethereum, you'll see 100-point swings. And my expectation, I'm not going to flip back to the Bitcoin chart, but my expectation is when Bitcoin breaks this symmetrical triangle and you have a breakout, like a rip to the upside, yeah, you're going to start seeing 1,000-point swings really quickly. And yeah, that's just, I think, obvious at this point. It's pretty crazy. Let me see what I'm missing in the stream. Paper bag, baby. That's right, Lewis. Captain Weber's in the house. Boom. Yeah. White Wolf morning. Costco whole market ripping at boots on the ground and capital. Yeah, it's pretty crazy. It's all related. It's all related. And 1.9 trillion they want to pump out, and Yellen's general tone and approach to how she handles these type of situations. And frankly, during her confirmation hearing, everyone's saying that the mistake they made in 2008 was they let off the gas too soon. So they literally got folks in Congress saying the last 11 years of the stock market basically just ripping to the upside for 11 years wasn't enough. They didn't juice it enough. So we could have the debate all day long whether fiscal policy is inflationary, deflationary. Gotta love Stephen Van Meter's perspective on the matter, arguing that it's overwhelmingly deflationary, and I just he's much more capable of explaining that ideology, which is why it's so enjoyable and invaluable to watch. But separate and apart from the inflationary versus deflationary debate is the fact that when they do fiscal, it juices the crap out of asset prices. We've seen that in '08. We've seen that with every stimulus that they've released. We saw that obviously in March, and we're going to see it again. It's just what it does. Now, obviously, you got folks running around with the bubble talk. Whether it's a bubble or not, I fall back on the statement: a trend continues until it stops and reverses. The trend is going to continue unless the story changes, and the story's not changing. We had a systemic event in March where the system, well, it wasn't even in March. It all really started in September. Good parts of the system were freezing up. They've injected so much liquidity. There's not going to be a solvency event or a liquidity crisis. Rather than there's probably going to be a solvency crisis. I mean, can they print their way out of a solvency crisis? I don't know. We haven't seen it yet, but we're going to see the wave of defaults. But the point is, they could print their way out of a liquidity event. They could just start buying stuff, and that's exactly what they did. It was a liquidity event in September 2019. The banks weren't lending. The Fed stepped in and provided the liquidity. The liquidity event with treasuries and bonds, and they started buying the bonds. They were the market maker. They created the market, and they've been buying bonds ever since. And they're basically, the United States is the largest buyer. You listen to Lynn Alden for this type of analysis. They're buying treasuries. The Fed is the purchaser of treasuries, way more than is being purchased internationally. The Central Bank of the United States literally is supporting the entire United States financial system. Without it, the system would collapse. So, they're about to print 1.9, and Yellen's position and Congress, their perspective and statements during confirmation, they're going to juice this thing. Whether it's right or wrong, it is what it is. And all signs point to trend continuation, which, what is the current trend? Bullish, ipso facto, bullish continuation. That's the name of the game. Hit them likes. Thank you. Appreciate it, Matt. White Wolf, Brian Brooks, OCC. So Brian Brooks, I probably, so he's, whether folks think he has an agenda or not, it's irrelevant. He said some great things, and depending, everyone has the capacity to judge a person by their presentation, their tone, the way they craft and structure sentences. And when he talks about crypto, he's earnest. That's the way he feels, and he's quite passionate. So I believe that he's leaving office, setting the momentum in the direction that he thinks is good for what he believes in, which is pretty much everyone at this point, like Yellen and Brooks and so many people, is literally trying to remain competitive. So the U.S. dollar is the global reserve currency, but it is significantly under pressure. A good part because of competitiveness, and that's pretty incredible that a reserve currency is having competition, and it's technological competition. It's coming out of China and the digital yuan, and the next 5 to 10 years, the ambitions of the Belt Road project, and literally just the digital yuan and the capacity for the Chinese Fed, because the Fed has an unlimited balance sheet, even the Chinese Fed, the central bank. They're able to basically extend unlimited credit. So if everything's digital and they can extend unlimited credit, then you have the capacity to attract participation, attract investment, attract everything that you need for an ever expanding and growing financial system and productivity, gross domestic product. So yeah, there's quite a bit of competition coming out of China, and the interesting thing is Brian and Tom Emmers and a bunch of other folks really believe in decentralization, and that the free market, at least Silicon Valley, can or should maybe play the role in the U.S. Um, creating its creating what's necessary to remain competitive. So instead of the government doing it, Brian and Tom Emmers definitely think it should come out of the public sector. So it's going to be interesting to see how that plays out in comparison to government's tendency to want centralized control and a central bank digital currency, which is what JP, Jerome Powell, has talked about, and what obviously the IMF and a bunch of other agencies are talking about, and persons. But versus what Brian Brooks is literally opening the doors to with the banking sector and the digital, so accepting digital currencies for custody as well as transmission. Um, and we'll see how that plays out. There's a bit of a war, probably, so to speak, in the U.S., whether the public sector truly controls a good portion of the financial system or the Fed and the central bank really retain totalitarian control, so to speak. Captain Weber, thank you. Hit them likes. Can you pull up the 1 inch chart and tell us what you see? So, 1 inch, I've been giving this a lot of thought, and let me pull up the chart. So 1 inch ripped down, ripped up, BTC. I'm quite bullish on 1 inch. For my own personal reasons, I've chosen to exit my position and reallocate towards Rook at this point. Um, so we all got a massive airdrop. If you liquidated above $2, you did great. If you bought at like a buck and a quarter, $1.20, you did great because now it's sitting at 180. It ripped up to $2 over the weekend. And yeah, I probably expect bullish continuation. I'm seeing this, the sentiment and the feeling I get is comparable to Curve, but they're very different because Curve is one of the largest AMMs in the space, and 1 inch wants to be, but that's not what they are. 1 inch was originally built to be an aggregator. They never had Mooniswap, and that doesn't mean there's not a significant value stream or revenue stream that could flow through the DAO. What's and that's what's meaningful, and that's what I see for 1 inch. If you stake your DAO, your assets part of the DAO, you're getting a revenue share, which in theory, the way the market is going, not emotionally but observationally and analytically, it's going to just increase and increase and increase. And if you have an ownership to a portion of the revenue share, the governance reward, and the aggregation protocol, because a portion, the 44.64% goes to governance, you're at 26.17% APY, which is derived from spread surplus, which is a portion of the transaction fee. So this revenue is sourced sustainably. So the uh, if they probably what I do 125 150 mil today, let's check it out. I have it up. So if they're doing 1.5 bill or 10 bill, all of a sudden your percentage will stay the same, but your revenue is going to go through the roof, and that's what it is. That you're owning a proportion of the platform's transaction fee revenue. $250 million, absolutely incredible. And Curve did 176. Curve's the same thing with VE Curve. Um, VE Curve is still one of my larger positions, but I didn't feel that I needed the exposure to 1 inch. You can't always own everything you want to own. You can't go all in, can't spread too thin. I felt a little spread too thin. My position size in 1 inch was a little lower than I would have liked. And Warren Buffett always says, if you're going to make it, you got to bet big. So these are all the types of questions you need to be asking yourself, which means there's always going to be anxiety that you're making the wrong decision. And that's just the nature of this game. So try and draw on past experience, your own personal past experience, not the market history. Market history does not guarantee future events, but draw on your own experience and gut instinct And that's how you make the best decisions possible. Listen, it's not a bad position to have. Just whatever I do isn't necessarily the best thing to do. But look at this thing; it's spitting out 26.17%. You got 100 grand in there, and you're making $26,000 a year. And this thing was at 50% last week. And just as I said, if the platform transaction fees go up 10x, you're making 260 grand a year. So that's huge. Absolutely incredible platform. So Curve has similar types of analysis that could be applied to the platform. Your VE Curve, you're owning a portion of the platform's transaction fees. What's meaningful to consider and to apply to your calculations is the amount of tokens in circulation and the dilution that occurs as they're emitted. So there's probably about a little over 50% of Curve's tokens have been emitted. So I expect my proportional ownership of the VE Curve supply to be diluted upwards of 50%. And that's okay. Same thing is going to happen with 1inch. They still have emissions to go through. So those emissions, obviously, a good portion of them will be directed towards participation in the DAO staking. So your proportional ownership will diminish. Crypto Chicks in the house, always a pleasure. Macro Mind Noah, can you envision a scenario where the world is depression and crypto holds value outperforms? Well, crypto is and value has absolutely nothing to do with depression. Crypto and value has everything to do with basically fiat. What was it? George Gammon said the other day. It's not that gold goes up in price, it's not that homes go up in price. It's that dollar is crashing. So as the dollar goes down, everything else appears to go up in value. It's all for sake of appearance, albeit there's just a huge amount of adoption to occur for the crypto space, so that's going to significantly outperform other inflation-resistant assets. Obviously, the amount of homes out there is not going up a huge amount, so it's not like that market could expand, hundreds and hundreds of percent. But if you're at 2% global adoption for the crypto space, and you have 98% rest of the world that want a piece of it, there's a huge amount of expansion that can occur. Excuse me. Better than yesterday, but damn. White Wolf, that tweet thread was great to see. My man Craig, always with good technicals and great observations. Noah, when Super Chat will be available? Super Chat is currently available, everybody. It's cool. Got past 1,000 a while back, end of last year. Heirloom, FYI, CoinGecko announced virtual meetup tomorrow. CoinGecko, one heck of a team. They bootstrapped the crap out of that project. Very successful compared to CoinMarketCap, and they owned by Binance and whatnot. So CoinGecko, good stuff. DeFi Pulse, DeFi Llama, a couple of shout outs to great projects. Pellet says, hey Pellets, my man. Would I ask if you have thoughts on what could happen at the crypto tether is ever classified as a security? Well, no, it's not about being a security. It's all about the peg, and it's all about the assets that are backing their tethers. Now, look at Willy Woo's posts. Find Willy Woo's posts. Just go on Twitter, follow Willy Woo, and he's going to give you probably some of the best unemotional analytic feedback about, including here. Look, tether FUD is a good thing. We need to shake out weak hands that come in recently, mainly FOMO buyers who know not knowing what they bought. We're starting to get a bit warm over the heatometer. This consolidation is super healthy. So that's, I think, his analysis. He's going to obviously one of the most successful people in the crypto space historically, and this type of opinion is extraordinarily meaningful. And he's talking about basically this pullback where we are right now. This is just an incredible pullback, this chart. Wow, 37,400. When this rips to the upside, man, you start seeing $1,000 increments of pooch, pooch, pooch. That's going to be some serious price action. And Ethereum will be $100 increments, is my expectation as well. How can we view call orders and put orders? Well, what is that, like Bybit type shit? Derivatives? I don't know. No interest. All I know is A derivative is not spot; it's not the actual asset. So I'm not sure entirely the relationship between derivative uh, uh, calls and puts getting liquidated. I don't know how that directly ties to the spot price because we look at spot price and it's not a futures contract, so it's the actual price of the asset. So that relationship a little bit beyond my expertise. But obviously, if there's a massive cascade of short liquidation, it pushes generally the price of Bitcoin up because it forces people to buy to cover. So that's probably the biggest deal. That's what it is. They have to buy to cover their short position, and they're buying spot, and that's how the derivative position affects spot price during the liquidation process. All right, we answered the question right here, right now. Pellets, thoughts on Yearn 2? Yeah, Banteg and Andre are some of the most important figures in the crypto space. They just have a certain technical capacity, a programming capability, that type of analytical mind that is far superior to the average. They are outperformers. I'm an Android developer by trade for 11 years, and I can't do what they do. Um, I know two people personally that have a programming and not even necessarily mathematical capability, but that deep fundamental understanding of the low level languages that is far superior to just my mental capacity. And it's because interestingly, I get a sense of the mentality of folks like that operate Curve and the Brilliant Boys in 1inch and the Brilliant Boys on all the teams, Bancor and Andre and Bad Tag. They I get a sense in their minds because of the couple of folks that I know that have a certain type of skill, and I've seen them what they've produced. I have a friend that stops by sometimes that wrote uh, a full assembly language emulator in Kotlin, and it's just full on emulation of an entire virtual machine, and the implementation makes sense. It makes sense to me when I look at the structures. I could have never written anything like that, but the way he tied together the components, you just have to have this very big picture combined with the capacity to implement it at a very low level. Uh, Genius. It's genius. And there's a large given the size of the planet, there's a very large percentage of geniuses, but it's a relatively low population considering global scale. But it's genius, and the people that are building these platforms are nothing but genius level. Absolutely fascinating. Yeah, you want to see whale bait, Heirloom. I understand. You don't want to be but whale bait. I mean, don't worry about it. Look at the chart. This is an extraordinarily bullish chart, and you got to remember it's not even about the chart. It's about the macro narrative, which is like Raul's perspective. He doesn't operate on daily timeframes or weekly timeframes. He operates on monthly and yearly timeframes, and that's kind of how we started the show today with Yellen and the stimulus print and the the tendencies of Democrats and the big push we're going to get for social programs to help out the lower portion of the wealth structure in the continental U.S. And all of these processes are going to contribute significantly to asset price inflation. Not necessarily consumer price inflation, goods and services. That's what they're going to try and control. But they're not going to be able to control whatsoever disparity, which is the separation of the less wealthy from the wealthy, because the expectation and historically we have uh, empirical evidence that these types of processes, another $1.9 trillion print, is going to juice the shit out of the asset prices, homes, equities. Um, that's it. Look what it did to the crypto space over the last year. That's the name of the game. Captain Weber hooking it up with the 5 buckaroonies with the super chat. Thank you, my brother. Appreciate it. Good stuff. Anything else I could look at? Um, Love that Yearn. Aave is cool. I keep a small position in Aave just because I think they're going to take over the entire banking world. Uh, I have like 40 Aave. At one point, like man, last year this thing was so cheap. This thing's run around at $200 per Aave at this point. I just think Aave. I don't like to hold small positions in assets. I hold very few like tiny positions. My tiniest positions really are Aave. I don't want to get into another portfolio, but what I'm looking at right now is Aave, Bancor, Zero X. Those are my smallest positions. I usually don't like to hold small positions, but I think they could significantly outperform. Um, I mean, Bancor could just be explosive. They have a unique AMM implementation, and if they attract a significant amount of market share or the transaction volume goes through the roof, there's no reason a 10x is out of the question. More. So, and Zero X is one of the leaders in transaction volume of the centralized exchanges. Check it out. Check out where Zero X is. I mean, yesterday they were up there. Give it a second to load. Yeah, look at that. $143 million. So Zero X is right there. Yet their token price is extremely depressed. They are it's an inflationary asset. Well, I believe I don't think it's inflationary. It's not deflationary. That was my original thesis that I was going on for Kyber last year. Kyber has some of the most extraordinary protocol properties in the entire space. It's deflationary as well as having an incentivized supply disruption component, which is the staking component. So they have the protocol properties, but what they don't have is the volume. 31 million compared to Zero X, which has not as good protocol properties, but they have the volume. And then you get into the winners. Uniswap, $918 million in one day. These guys are cranking out 20 plus billion dollars a month. Sushi. They forked off for Uniswap, but they have a profit sharing, so that's a massive driver of participation. So that's why they're there. I think Uniswap is going to do something because they have a massive, massive treasury. They have no profit sharing. They have accumulated an absolute fortune. So whatever they could literally launch probably a $30 billion enterprise organization. Who needs to go public? You're you could just go public via a DAO. They have the amount of what they could produce could change the world with the amount of money they probably collected over the last couple of months. Check this out. Look at this. For the last 5 months, 15 billion, 11 billion, 9 billion, 12 billion, and 14 billion, doing 918 million. 1 inch, they're coming up. I like their DAO implementation. Curve, aside from the rocky start, I think Curve is one of the more critical components. They're now the cross asset swaps using synthetics. That's crazy. There's basically no slippage. Transaction fees are through the roof because of the contract interaction. But big deal when you start seeing like half a million, 1 million, $5 million transactions, and that's really what Ethereum until we get to like L2, significant L2 adoption, and F 2.0. Ethereum is quite relegated to the whales because if you run around with a $200 million portfolio, you don't really give a shit about $100 transaction trying to do $1 million swap. Just saying, it's all good. It's not a bad thing. It just is what it is. Crypto chick, I agree. Go big or go home. Yeah, but you know that somebody still got to do the never go all in, never spread too thin. You don't go all in, but you can't spread too thin. So that's why I generally don't have relatively small positions. Like some people run around with like 20, 30 bags of like tiny stuff. Fraction of their portfolio, like a little bit. If it goes to the moon, it goes 1,000x. No, stop looking for stuff to go 1,000x and just find the good shit and stick with it. I think that is an important factor to consider. Bitta says, what other options do retailers have other than Uni for DeFi coin? The fees are high. The fees are going to be high in everything, unfortunately. I'm sorry. I know I pointed you in the direction of Uniswap, but it's not a Uniswap issue. It's an Ethereum issue. So the most important thing you can get out of that experience is the observation of that the fact that fees are high. Why are they high? Because millionaires are running around using the platform. There's something like 45 millionaires on the planet. 25 million millionaires, and they don't care about $100 transaction fees, $200 transaction fees. As long it's the power of being off centralized exchanges and operating as a sovereign entity is extraordinary, historic in many regards. So it's not obviously small retail is completely priced out of 50 $100 transactions on Ethereum L1. But the most important thing I could say is when I said to play around with that bit is just to see it and maybe do a dollar transaction, maybe spend 20, 30, 40, $50 for the experience to see what it is. And then you could share those thoughts and those observations, and that's probably the most meaningful thing I could recommend to everyone without any hesitation at all. It's just the experience to understand really why this is overwhelmingly the future of the financial system. What are your thoughts on something comparable to Ren Dark Nodes, Cosmos, or Polkadot platform? So Ren should be fully interoperable with both Cosmos and Polkadot. Oh my God, what's the only thing that comes comparable to Ren is Thorchain, but it's not Ren. Ren Dark Nodes. Something's up with the Dark Nodes because Dark Nodes are not just for the decentralized um, data storage, which is basically what a dark node does. They decentralize the holding and custody of private keys. So they could do a lot more than that because basically it's a network of server infrastructure that the platform at this point is centrally controlled and maintained, operated, updated, so on and so forth. So they have a freaking ridiculous network of 1,500 computers, VM instances. That's crazy. So I just got a gut instinct that something's going to go on with KeeperDAO because you're talking about you got 100 million, and all of a sudden you got 1,500 computers capable of crunching some serious data and executing transactions spread across the entire planet. You can run some crazy arbitrage and mempool analysis and front running, and that's what KeeperDAO does. It looks for extraordinarily creative ways to extract value out of the Ethereum mempool, finding opportunities, extracting value. It's just an extraordinary project. There's absolutely nothing at all in the crypto space that's even remotely comparable to it. Maybe individuals do what the project is doing, but there's no project out there doing anything even remotely comparable to KeeperDAO. Captain Webb, Craig says Banker is really making some nice gradual strides. Yeah, you see that they're sustainable now. That the platform fees are capable of sustaining the impermanent loss, which is really cool. Which means they created a stable protocol, and it's innovative. That's a big deal. So if they gain market share, good for them. So that's why I've justified the relatively small position. But look, they have 20 mil. I mean, 20 mil a day. Come on, this is massive stuff. If this was like just a company around the corner, this isn't a small business. This isn't a tiny neighborhood convenience store running around doing 20 million a day. That's crazy. But in the big grand scheme of things, they're the small player in the face of $918 million a day. And what's even crazier, guys, this is 2020. That's what you all have to remember in the big picture. This was literally 1 year. Could you imagine 3, 4, 5 years? This is going to suck in participation and brains. You know how many brains around the world are thinking what they could build on the Ethereum platform to tap into 100 million or $1 billion a day of transactions? Oh my God. This is going to be a gold rush of opportunity. And it's not going to stop. It's just a floodgate that just got open, and it takes time for things to materialize. So it took a year. It took a year for this to occur, and it's just a floodgate. That's just what it is. Yeah, Matt, you're welcome here to learn. That's what I do this for. I just sharing my ideas, and a lot of it is venting as well. 5% is a decent staking percent, and what? I don't know. I don't know what you're referring to. What to stake? How about wrapping ETH to swap? You don't wrap ETH. ETH you're able to interact with directly on the AMM exchanges. You don't have to approve it. The way the exchanges work, basically, Ethereum you push, whereas tokens get pulled, which is why you have to do the approval process for tokens. That's basically the way that works. Davor says, just tuning in now. Welcome. Noah, we get Bancor award for liquidity providing tomorrow. You more risk these 1% before you speculate best. I have a bunch of stuff in Bancor. There's no reason to not throw some stuff in Bancor. I'll show you what I got. 1209. I'm going to wrap this up in a second, but let me show you what I got in Bancor. I get it from the Oasis. So I have a small, a little bit of Bitcoin in the Oasis. I have a little borrowing, but 0.35 Bitcoin. I'm borrowing $3,000. I threw that in a Bancor, basically a DAI position. It's getting like 80%. So it's just a little something because that percent is going to be denominated in BNT. So I have the small Bancor position, which is here. I have 1,000 Bancor, but that's going to be compounded because these are going to be emissions. And here's the emissions rate. You know, DAI BNT. I'm getting 234%. Look at that. So I got 1,000 BNT in here. And if I keep that for a year, I'll have 3,000 BNT. So that's crazy. And apparently these emissions are well, not the emissions. That's probably coming from Treasury. They did a heck of an ICO back in 2017, so they definitely have assets to distribute. And it's sure as hell driving liquidity to flow into the system. Just they have caught my eye. They're catching a lot of people's eye, and it's just a massive market and a massive system. And there's no reason not to tinker around a little bit. I threw my Aave in here, so I got some Aave in the security module on the Aave platform, but I threw some Aave in here as well. That's the name of the game. Heirloom. Thank you. It is great to be able to work from home. Gets a little tiring and frustrating at times, but when you're sick, oh, I'm so sick right now. So I'm thankful. So it's a pleasure, always a pleasure. 12:11 p.m. Tuesday, January 19th. Thank you everyone for joining me as always. It's the start of the week. It's only Tuesday. I'll be on tomorrow. Tomorrow's inauguration day. Does that matter to me? Yes. But I'll be on. I'll be talking because we always have something to talk about. Thank you, everyone, for joining. Smack those thumbs up buttons. 24 people on the stream, 15 likes. Smack those thumbs up buttons. Every single person. Tell everyone to subscribe, and I will see you tomorrow. Peace.